Hey, this is BA, and I want to welcome you to w.d.gann, a glimpse into his true methods. And, I went out today and looked at some videos by some really well-known people within the Gann field and stuff, and to kind of see what they were doing and all that stuff. And there's a lot of information out there on Gann, and it's probably a good thing for those that are trying to sink their teeth, into things, people that are relatively new and all that. But there's a couple things that I think are missing out there. And one of them is forecast, because as you can see or will see here, w.d.gann could forecast. And I believe if someone really understands their methods, his methods, that they will also give forecasts. Okay, at least, to where people can gauge that and make sure that they, really know what they're talking about. And I do that myself on my site, ganntrade6.com, and that's ganntrade, the number 6 and .com, and I put forecasts up there and stuff. But what we're going to take a look at today is what w.d.gann was actually doing, okay? Because there seems to be a lot of conflict out there. Like, you can go over to person A and he'll tell you something, and then person B will tell you something different, and person C, she'll tell you something different. So there's a lot of, where's the forecasts to back this stuff up? And that's, I think, such a critical element. And we're going to take a look at one of w.d.gann's forecasts, just one of them, that was done and issued before it actually went out. And I believe in this field it's so critical, whoever you learn from, take a look at their forecasts, because the better those forecasts are, the more the individual is going to understand w.d.gann. And I think that there's a lot of areas people they're going down the wrong roads and they're getting stuck. Okay, so let's take a look at some of the psychology here first. This is famously known as Gann angles, or Gann fans in some circles or whatever. w.d.gann wrote it was actually a pamphlet that was published for a while. It said the basis of my methods, and then you go into it and it was geometry. And people assumed, okay, well, that's what he was doing. I mean, he says that's the basis of my methods. What they didn't understand is geometry is two components. It's time and price. Okay, and so Gann, what he was doing was he was using geometry to measure time and price. That was the basis of his forecasting method. All right, now that's where it stopped. You have to understand time in order to apply those geometric angles. So you can't just randomly put these things on. Let's take a look at this, okay? As you can see here, this is kind of going up, from where the low down here. It's kind of going up, and it kind of walks this angle. It cuts it here. It goes up to it, and kind of looks like it runs into resistance. Okay, and here we're kind of out in space until this point gets hit. We go slamming down through that angle. And then we just keep going up, kind of, and again, it looks like it provides resistance. By the way, for those of you that don't know, support is when it rests on an angle, it kind of like walks up it, like here would be support. Okay, see how it came down and it stops? That would be support. Resistance is when it's below an angle and it can't push through. Okay, so it looks like we're resistance all the way up here. Okay. And then we go down here, we go through this, come back up, and then we go slamming down here, okay? And as you can see, I mean, these angles do catch turns. I mean, look at how close that was to the high. Look at this high, it nails it, okay? This low, it nails this. This low is a little bit through it, but okay, Here's the question, though. And this one, it looks like a little bit of lost motion, but we'll take it. Here's the question. When is it going to break through that angle like it did here? Okay. And when is it going to use it as support and resistance like it did here? It was resistance all the way up until this point got hit. It literally, we call it walking up the angle. Okay? That's the key. You have to know that. If you don't know if it's going to stop at an angle or if it's going to go through the angle, you've got problems, okay? Okay, let's say we're here and it's going down, okay? And you say, okay, well, it's going to stop at this angle. And it doesn't. I mean, it just keeps going lower. Okay, so by theory, you thought it would go down to this angle. Then you'd buy and get into it. Well, it didn't. It continued on down. Okay, well, I know this as a trader. Okay, that your strategy there would not have worked. Okay, why? Why would it not have worked? Is because you don't know. Without the time element, we're going to take a look at this more. Without the time element, you don't know if it's going to stop on that angle or if it's going to go through the angle. You need to know that. Okay, let's take a closer look at this. And this is kind of that area blown up. Okay, and as you can see, we come down here, like I said, come up here, go down, and that kind of reacts off of this. This is called resistance. Comes down to support, goes up to resistance, and then it comes down. You would think that support would be here, right? Because it was back here. You'd think that support would be here. Well, guess what? You get a big surprise. It's not. So it just goes flying on through there. Okay. Well, you've got problems. Okay. If you don't, here we've got it to where it stops on the line. Okay. Stops on support right where it should. And here, it acts like it's not even there. Poof. Just goes right through it. No big deal. Okay. It does that here in this move. It comes down, acts like it's not even there, and just comes, down even further. Okay. So again, focusing in on the question from a trader's perspective, how do you know if it's going to go through the line or not? And the answer to that is time. This had a time cycle. It was a smaller pivot, but it had a time cycle due. So did this. All turns are caused by time cycles. End of story. You have to understand the time cycles or this will not work. Okay? You got a bunch of geometry. Hey, it works great in hindsight. Look at that. In hindsight, we nailed that top. And we can definitely see it kind of walked up there. It kept getting resistance all the way up to that point. What happened up there at that point? What happened? The time cycle pivoted. Okay, BA. Well, that's nice to know. When is this going to happen again? Well, there's a way of knowing that. Okay, there's a way of knowing when these time cycles are going to pivot. You know what? Ganns says this in, and I hate to be one of those Gann quoters out there. Well, Ganns said, and then, it gets all twisted. But what he said was that time will arrest price. What that means, that's a fancy word, but that's essentially what's happening. Time arrests price. What it means is this move did not stop until the time pivot occurred. When that time pivot occurred, then we went slamming down. Okay, not until then. We just kind of went up at this, in this, I guess you could put on like a small channel line there. Okay, so that's key. Well, you have to know where those are. Here's another time cycle right here. Now picture this. Let's say we know, as an example, let's say we know when these things are going to come in, these time cycles. Let's say we know when they're going to come in. And let's say on this date, we have a time cycle due to come in. So we know, that we pivoted high here and we're going to go down. We know, all right, we know the time of that pivot. We look at this, and on that date, we're up against an angle. Okay, it's providing support right here. That's the key. Those two in combination is the basis of Ganns' system, not the geometry. Okay? Yeah, you can take a look at this and say, well, the geometry stopped it. It stopped on the line. Yeah, but without a time cycle there, you can't use the geometry. Nobody can. It only works in hindsight, you see. So what is it about these time cycles? I mean, if that's the case, if this is really the way markets work, then w.d.gann would have had to have written something about these time cycles. Where exactly does he do this? Well, let's let Gann say it right in his own words. Now, this isn't me interpreting Gann, okay? This is what Gann typed out himself. He talks about the 10-year cycle up here, okay? All right. Wheat varies slightly at times from the 10-year cycle. And tops come out between 10 years and 6 months and 11 years. This is due to the position of some previous tops or bottoms, as time and angles will show. See, there you go. Time and angles right there. It doesn't just say in angles. Okay. Well, so many people out there, I've heard them, they've come up to me and said, BA, I've spent $30,000 on geometry. And I said, well, how'd you do that? And he said, well, I was in a class. I said, well, how many people were there? And they said, well, they were packing them in. And I said, well, how was the information? They said it was all shit. And I said, well, can you trade with it? No. Well, geometry, you're not going to be able to, because you have to combine time with it. Okay, let's continue on with that. Okay, bottoms as time and angles will show. But the main cause is that there are 2 crops of wheat produced each year in the country, and if the crop is extremely good or bad, high or low in prices run to 11th year at extremes. And the other thing is there's a wheat crop harvested almost every month in the year in some country. Note top on May 1877, according to the 10-year cycle, there should be a top in May of 1887. The high of that year was reached in the month of May, and a decline followed. But the extreme high prices for several years occurred in September 1988, bringing the top out from 87 in the 11th year, meaning it extended a little bit over a year. The next top and extreme high prices would be due in 1898. The lighter corner occurred in May 1998, and it says MAP, but it's May. Options sold at $1.85. According to the 10-year cycle, another top should come out in May 1908. The high of that year, 1908, was reached in May, but in the following May, 1909, extreme high prices were reached, coming out on the 11-year cycle. This is due to 135 months, or 11 1/4 years, being 3/8 of 360. Okay, those are harmonic divisions, and we're not going to get into those in this video. The next high point, according to the 10-year cycle, would be due in 1918 or 1919. But note that the last extreme high was over 50 years occurred in 1967. Therefore, extreme high prices on the 50-year cycle would be due in 1917. May wheat advanced to $3.25 in May 1917, and the government stopped trading in it, fixed the price at $2.50 per bushel, and high prices prevailed until 1920. Now, we're just coming into the year 2016. So if you do 2 times the 50-year cycle, what he's doing there is he's telling you the 50-year cycle is anchored in 1917. Well, if you add 2 of those, you're going to get 2017. I'm not saying a major high will occur in 2017 in wheat. Okay, I'm saying it will occur around there. There's smaller cycles, and we're going to get to see those in just a little bit. The smaller cycles will Geiger those in. Okay. All right, so keep that in mind. And the date that I'm actually making this is January 27th of 2016. So when all this occurs, you'll know that this, it was forecast and how it was done. Well, here he's forecasting these huge, that's fine, BA, but 10 years, long time to wait for these large ones. There's smaller ones too. Okay. The 7-year cycle. This is a very important cycle. You should check 7 years from any important top or bottom. Also watch 14 years, 21 years, 28 years, multiples of 7. Tops and bottoms often come out 7.5 years apart or on the 90th month. It is very important to watch 90 months for minor as well as major tops or bottom. Well, how well is that cycle? Well, it did pretty great, because if you take 2008, that October 2008 meltdown, and you subtract 7 years from it, you get September 2001, which was, of course, the World Trade Center debacle. Okay, and then he talks about the 7-year, which is really the 5-year cycle. That's one of Ganns' writing styles, is to throw everything off, but it's 5 years. This period is 60 months. It's important because it's 1/4 of the 20-year cycle and 1/2 of the 10-year cycle and 1/6 of the circle of 360, or the 30-year time period. And then it gets down to 3-year cycles. Culmination of major and minor moves occur in the 34th to 36th month for major, minor tops and bottoms. Always watch 3 years from any important top or bottom, as a change of trend is likely to occur. Okay. This is forecasting grains by time cycles, time rules. Okay, because in those we were talking about the larger turns. We want to focus in on this a little bit more, because I know, I personally am an options trader, so I use swing trading, and a 10-year cycle is going to be great, but I'm, without the smaller cycles, I won't know how to play it. Well, this goes into that area. Daily time rule. A minor change occurs every 7, 10, 14, 20, 21, 28 days and 30 days. This time period is only a proportion of the major cycles. And I'll key in on something here. 7 times 2 is 14. Okay, because you say, where do these numbers come from? 7 times 2 is 14. 7 times 3 is 21. Okay, 7 times 4 is 28. The other one is 10. 10 times 2 is 20. 20 times 2 is 30, and so on. You see that? So these are, this is a division by 4, and this is also a division by 3. Okay, and what those are is called harmonical divisions. For those of you that know what squares and trines are, for those of you familiar with the Gann emblem, it's all right there, folks. Okay, monthly time rule. Changes of trend occur every 30, 60, 90, and so on. Okay, so what I'm saying here, we don't need to read all this. What I'm saying is, yeah, there's these large cycles, but there's also these smaller cycles, okay? And the minor change occurs every 7, 10, 14, 20, and 21 days. This time period is only a proportion of the major cycles, but here's the deal. You have to know which one. Say we've got a low, okay? Let's see if we can go back to this low. Yeah, we get it. Right here, this low here, okay? And we have another low that occurs 28 days later. Well, how did we know that was going to be the number that was activated? Because not all, if you look at this, not all 7, 10, not all those were hit. How did we know that this one, the 14-day one and the 28-day ones would be active? See, that is the key. That is the key. So what he's saying here isn't that all these are going to produce highs and lows, per se. Certain ones are the key. Okay, certain ones are the key. Meaning, in that move we just took a look at, the 14 and the 28 did it. The 7, the 10, the 20, the 21, hardly anything happened. A little bit of vibration there, but hardly anything happened. Okay, well, there's a way of knowing those in advance. And the answer to that is through repetition of the past. And we're not going to get into that in this video, per se. All right. I promised you a w.d.gann forecast. Here's his 1929 annual stock market forecast. Okay. It was issued November 23rd, 1928. This actually came out with what's called the supply and demand letter. Okay. And here he talks about small supply and large supply. Okay. That's why it's supply and demand letter. It's what he had out there. And if you Google these things, there's a lot of different ones out there, not for 29, but for different years and stuff. He had different tiers for people, and the supply and demand letter was kind of his public one, but he had close friends, and they paid him more, and it was much more thorough. But in here, this is his stock forecast. This is not wheat or anything like that. Okay, and he says projected curve number 1, the main trend, which the 30 industrial stocks should follow. Okay, and he's pretty much spot on. If you go through these, if you take these dates and you look through his forecasting, okay, You take these dates and you look through the forecasting and see how it did. Well, he was plus or minus a day 90% of the time. He was plus or minus one trading day. What that means is, he nailed the September 3rd high, but let's say October 2nd here. Let's say it didn't, the high here, he predicted October 2nd, didn't come in on the 2nd, it came in on the 3rd. That's still allowable. One trading day either side, and he has a 90% accuracy on this. I know, I went back and checked. Not only have I checked, I've checked different years. I've also been able to replicate this. Okay? So that's what you get. And there's I don't know if I should go into this, but there's a little bit of lost motion in there. Okay? With time, to where it's sometimes it can be like a day off. He's not going to be like a week off or nothing like that, but it can be like a day off. And there's reasons for that. And as a trader, it's different than just watching the forecast, because as a trader, you'll understand where those places are. Okay, note in here he doesn't show any geometry being used. He shows time. Oh, this is a scale over here. Okay. He shows time. He got this bottom right, this March 28th, but the actual Dow made a high on September 3rd, which he has a little bit lower than the August 7th. He was a little bit off. Okay, no big deal. I mean, he didn't screw it up. It was a high. He nailed the September 3rd high. It just wasn't the high, which he's got for August 7th and 8th. And that happens a little bit. Okay, and there's ways, there's a technique that sits on top of this where you get different layers of analysis that will confirm this or back it up or deny it. This is just one service, like I said, one tier that he put out. So, very important that you see this, because a Gann trader that is writing all these things about Gann's techniques and all that, they need to be able to forecast turn dates going, and you notice what he did, from a high, low, high, low, high, low, high, low, high, low, high, low. Sequence is never broken. They need to be able to do that. They need to be able to replicate that. It's very important. All right. Now, this is Ganns. This is a hand-drawn chart from w.d.gann. As you can see, there's lines going here, and these are the geometrical angles that everyone's like the basis of his forecasting method. Okay? What they are, because he's got sell angle written there. He's got different things written here, and this is only just a portion of this. Okay, and it's blown up, and we'll get into that reason why. But as you can see, from certain highs and lows, he's got these angles going up. He doesn't use all the highs and lows. He's got an angle. But what's more important to our discussion is he's also got a time count. See, there was a low over here that occurred. He says buy at 1/2 a point. But there's a low that occurred here. It comes down here and makes a low here, and then it goes up and then up even more. Okay. So down here he starts numbering, and that's what you see here. These are time counts. I'm going to show you a secret. And I've already told you the date of this video because it's not out there yet. But I'll show you a secret, and no one's talking about this. And it's so important to what he was actually doing in his methods, and it's right here in front of your face. And nobody has brought it up that I've been able to find. Okay? And it's critical to understand what he was doing. Okay? Everyone knows, well, most people know he was using squares. Well, look at this. See this 25 here? He's got the number 25, which is square of 5. Now, that's his handwriting. That's not mine. Okay? He's got 36, square of 6. Here you can see this one real clear. 49 weeks out. He's got square of 7. 64 weeks out. He's got square of 8. 81. He's got square of 9. Okay. And note, because it comes, if you look at the price over here, it goes up, it goes down. So there's two lows here, and he's got this second time count going out. And we get this alignment here on square of 9, and also 64, which is square of 8, coming off of this point. Okay. Okay. And so you can see 100, square of 10. See, he's got these marked off. What are those telling him? See, you have to understand these techniques. It's not as simple as drawing geometry. That's not what he was doing. Okay? He was using the geometry only as a measuring device. Okay? Today we can use a calculator or a spreadsheet. But again, what is it that he was calculating, and why is it important? He was calculating time with it. Well, he's actually, in the geometry, he's calculating a time and price. Okay. He was calculating the relationship between time and price. A very important concept, but it's easy to get lost in the geometry, and that's not where the key is. The key is in the time component. And I can honestly say, in the 20 years I've been studying and using w.d.gann's techniques, I've never heard anyone talk about this. His use of squares on his chart like this. I've never seen it out there anywhere. All right. And it's critical. If it wasn't critical, I mean, why draw that? If you look at his charts, there's stuff all over them. Okay. It wasn't like he needed more stuff on his charts. There's a use for them. Okay. Very important concept. So the point of this is stay away from the just geometry part. Stay away from price. Spend your time studying time. Okay? Because once you understand time, the rest of it will open up for you. He said, time is more important than price. Hey, this is BA signing off. Have yourself a great day. Bye-bye.